Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and today we have a live webinar for you, Forex Trading Strategies Live, February 17th, 2021. And we're going to, let me give you a little bit of a background about myself real quick. I have over 30 years of trading experience in futures, Forex, stocks, options, and binary options. I have a degree in finance from DePaul University in Chicago. I have over 20 plus years of trading floor experience. I started at the CBOE. I was at the CME for most of my tenure, and also at the CBOT as they did the merge and became one exchange. I am the president and owner of Forex Trading Unlocked Incorporated. I am also the author of the book High Probable Japanese Candlestick Patterns. Really quickly, I just want to show you our disclaimer just to remind you that this webinar is for illustrative and educational purposes only. And with that, I'll give you one quick reminder that if you haven't already, please subscribe to our YouTube channel, Forex Trading Unlocked, or our Twitch channel, Forex Trading Unlocked, and also check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. All right. Get ready to rumble with the Forex markets. Let's get on with this webinar. All right, today's focus, how to use the markets as an indicator, simple techniques to identify potential trade setups, how to reinforce your position outlooks, how to take actions on potential Forex trends, Forex, futures, options, and binary options plays. They are all related. We will discuss how you can integrate these for those of you that are not just Forex traders. We will have an interactive question and answer with the chat. We are also going to do a little freestyle market analysis. So if you have any questions about any markets as we go through this, after I get through the mainstream stuff, we will go and attack them and see what we can pull up for you live. Okay, and we will help you to build up your trading arsenal. These are our goals for today. All right, so with that, let's get started. Okay, we have the Forex-trading-unlocked.com website already pulled up here. And we already have the workstation tab, which we got from the nav bar here. We pulled that up already. So we're going to scroll down. In today's webinar, we're not going to go over any numbers or anything. We're getting into the meat and potatoes of things. So we have the dollar index yesterday, which posted a short-term buy signal here. This yesterday's trading set not only a short-term buy signal right here, I also established a higher move low after a higher move high. This helps to secure the bullish trend. So we also have a bullish engulfing line buy signal. Okay, so this is a high probable Japanese candlestick pattern. This here is the bullish engulfing line. So for the index, we have a short-term buy signal, which is being generated off of a higher move low. Okay, so this low is higher than this low over here. So the trend right here, we established a bottom. Back here in the beginning of January, we made a lower move high. We made a higher move low, a higher move high, and now we've established a higher move low. All right, now let's get to the Euro US dollar. Okay, so now that we've established that the trend for the dollar index and the dollar itself is bullish, let's take a look at the Euro US dollar. Okay, let's see what's going on here. All right, so far we have, what do we have going on here? Today's trading, this is just in slight delay. We have a lot of selling action. Now we had a bullish engulfing line buy signal that had occurred earlier in February. Now the thing is that it already established its target right here. And to give you a little bit of an idea about that, we're going to pull up the Euro US dollar on our NinjaTrader platform. And if you notice here, we have the bullish engulfing line marked, and last week we had hit this line right here at $1.2148 in here, and we had set a short-term top here. This established a lower move high, then we made a little bit of a higher move low, and then yesterday we spiked, making a higher move high. However, that was only on the hourly and short-term daily basis. Yesterday's spike high was lower than this high here. So after a lower move low, we established a lower move high, and now consequently, we are selling off in a big way. I mean, between the high of yesterday, we have $1.2171, and the low of today is $1.2029. That's a very big slide in a 2-day session, which really has resulted really in 24 hours. Okay, so our downside target now here is $1.1951. We are looking for a retest of this last low over the next like 3 to 5 sessions, especially with the dollar index looking to lean higher. Okay, now let's just say that we're wrong on this analysis. Should we take out the high from yesterday? Well, then we're looking to challenge our extreme upside targets here at $1.2196 and $1.2243. So if you are bullish, or if you're looking for a breakout play, if you are short, you do not want to be short above this high from yesterday. So that's something you want to be mindful of. Remember that the overall trend for the Euro US dollar has been a bullish one. It has been rallying for the past couple months in a very, very strong way, and especially as we made the transition into from the end of 2020 into 2021. So we've had a lot of volatility and a lot of bullishness here, a lot of bearishness to the U.S. dollar. So right now the dollar has been in what we will be considering a corrective phase on the weekly, because in the daily it's now bullish, hourly it's bullish, but weekly and monthly for sure the trend is neutral at best, but still bearish in the long run. And the same is for the euro, which is the #1 component of the dollar index. Now, because of this sell-off today, this is helping to drive the dollar index higher, which is getting follow-through from yesterday's buy signal on the index basis. So what does this mean for you traders out there? Okay, well, we have some key levels for the Forex market. We know that right here we have this marked here at $1.2192. However, that was before yesterday and today's follow-through. So like we showed you on the Ninja Trader platform, this is now our new risk level. So if you're short, this is the level you want to be short against, $1.2171. Anything above $1.2171 will have this market hard pressed to be bearish. It will put us back on the rally campaign. So, but anything below here, especially with today's action here, we're looking for a test of this upward sloping support line, which has been holding this trend intact in the short run. And a failure from here will have us testing the low from back here where we had this initial buy signal. Now remember, this buy signal had already hit its upside target, so it was done. Okay, so now the fact that it turned around a few days later and now is having this reaction, this helps to follow through with the short-term trend, which has been progressively making lower move low, lower move high, lower move low. Now we have a lower move high that was established yesterday. Remember, the trend is your friend. You always want to try and be mindful of where the trend is going, but you also want to be trying to trade along those parameters as well. If you trade with the trend, odds are you're going to have yourself in a good way. You know, if you're trading against the trend, you need very strong signals. Now, speaking of trading against the trend, now let's go to the British pound US dollar. Now we're going to show you this one here. They don't always work. See these 3 black arrows here? This trend has been very bullish, the pound US dollar, over the past few months, and especially because it's very commodity driven. Now, a lot of people, when they look at the Forex markets, they don't think about commodity markets. Well, they actually have a huge impact in it. We're going to show you some relationships and why. First of all, let's look at the US 30-year market. This is the futures contract. Due to CFTC regulations and data regulations, this has to be in delay, and we cannot show you the current pricing. It has to be in delay like this. So yesterday we had the market making lower move lows again in the Treasury bond market. The yield is stretching, meaning that the 30-year, the longer terms are demanding higher market rates while the short terms are locked at their ceilings. So there's a big spread there. Now, as interest rates go up by the market, that makes the currencies more appealing. That also makes the dollar more appealing. So because of the big sell-off in the bonds and follow-through yesterday, that's most likely why we're seeing this start to run out of gas here. Now, here's the thing is, see these arrows? each one of these was a sell signal. We had a bearish engulfing line here. Then later on we had this dark cloud cover that occurred here. And then we had another dark cloud cover that occurred here. So just because you get a sell signal or a buy signal, it doesn't mean that it's going to work. You have to have other rules to apply to these things to make sure that you will follow through and get, you know, these things to pan out for trades for yourself. So one of the reasons we're normally at this point here, when this bullish or bearish engulfing line sell signal came in, I would normally take on a bearish trade. Now here's the thing is, oil is a very, very aggressive bull right now. We have a commodity driven influence in the currency markets that is definitely in play now. Last year, the coronavirus trade definitely overwhelmed a lot of trends. It definitely dictated a lot of dollar movement versus all currencies, versus instead of just having a free-flowing, you know, intraday differences. Just because the dollar is going up against one, it doesn't mean it's not going down against another. That's a normal thing to happen on any given day, and even in a long-term trend basis. Just because a lot of currencies are bearish against the dollar, it doesn't mean that certain ones won't be bullish. The pound right now is an aggressive monthly, weekly, daily, and hourly bull. Unless you have a really valid sell signal, I would say to keep yourself in a buy dip posture, meaning wait for a correction and then look to buy this market on a valid buy signal. The slope of the trend for this market is not too steep. It's been grinding, just buffering new highs. We do have today some selling action, which is helping to add through our dollar index trade. Now, while the euro is falling apart, and we'll look at some of these other major currencies, the pound is the second biggest weight in the dollar index. While these other currencies may start to fall versus the dollar, which that's what we're expecting to happen over the next few weeks and definitely a few days, the British pound US dollar has got a really big draw on oil. And as long as oil continues to make new highs, any sell-off in the pound will keep us in that buy dip posture. Only if we were to see, for instance, a big slide in oil, would we expect any extended downside correction with the pound versus the US dollar. Now, why is that? Well, if you think about relationships when it comes to currencies and how to figure out where they're going, you would want to look at the different crosses. So for the British pound US dollar, let's take a look at the GBP euro. Okay, what happens here? This market is a bull. So what does that mean? That means that there's a lot of strength in the pound, right? There's a big trend here. We have pound euro strength. So now we're going to look at the British pound versus the JPY. Okay, today we have a short-term sell-off. Well, okay, but overall it's a bull, but we have a reversal today. So where is that? What does that mean? That means that Japanese yen is showing strength today. Okay, now this is a big thing I want you to listen to. The pound versus the yen is a bull for the trend, but today it's reversing and the strength is in the yen. Remember, we're trying to figure out what's going to happen with the pound US dollar. So now we're going to look at the British pound versus the Canadian dollar. Okay, this market is also an aggressive bull. Today it's slightly lower. It did not make a higher move high. It failed to make a higher move high today, and it's slightly lower on the day. So it is a bull, but with a short-term reversal forming today. Okay, now let's look at the British pound versus the Australian dollar. Australian dollar overall, it's been in an uptrend. It's bullish. The past few days, it was rallying into that. It spiked higher today, but it is lower today. So the pound is weaker versus the Australian dollar slightly today, meaning once again weakness. Now now think about this. If the pound is showing weakness there, meaning that the Japanese yen, the Canadian dollar, and the Australian dollar are showing strength against the pound, what is the key variable to look at? Well, we already know that the euro US dollar, remember, the US dollar has the strength, so it's not in the euro. Okay, so that means that the British pound is a bear. Okay, so let's get back to the British pound US dollar. So the pound is trending lower today and has a bearish outlook going into tomorrow because It is an overall bull versus major currencies, but today it's reversed versus the Japanese yen, the Canadian dollar, and the Australian dollar. Okay? Now, they all have one thing in common. All of these currencies that are stronger versus the pound are weaker versus the dollar. Okay? So listen to what I just said. All of those currencies that the pound is reversing against today are also weaker versus the US dollar. So that gives credence to the short-term turn on an hourly basis and on a short-term daily basis for a sell-off in the pound US dollar. And as far as a trend, you would expect it to continue. Okay? So now, even though we have the oil trade on the table, if we can maintain this posture with these other currencies, then we could confirm the British pound setting a corrective move lower. Most likely, first, we need to take out this $1.3775 level. A failure from here will then have us testing this upward sloping support line, keeping the short-term trend intact. A failure there will have us hard-pressed to be a bull as it starts to take out and look out to test this $1.3566 area. Okay? So this is where we're looking at the British pound, and we've figured out that through the different crosses from the other currencies that the pound is a short-term bear, at least on the hourly and the daily. So now remember the dollar index. The euro is the biggest influence in the dollar index. The pound is number 2. So with both of those two falling off, that will help the dollar index continue to go higher, validating the buy signal in the index yesterday. So remember, the best indicator to use for any market is the market. So let's see, right now, do we have any questions in the chat room? We have no questions in the chat room currently. That's all right, guys. You just keep on listening, and we will get to some more stuff in a little bit here. All right, so we talked about the pound. Now let's look at the US dollar Swiss. Let's stay in the European trading zone. Look at this. We have the US dollar Swiss. We have a big rally going here. Look at what was established also. We had, see this little arrow here? You know what that is? This is a bearish engulfing line sell signal. A bearish engulfing line. Oops. Can't spell today. Engulfing line sell signal. Okay. So this bearish engulfing line sell signal today, it came off a higher move high, so we were looking for a corrective move lower. The overall trend for the US dollar Swiss has been bearish since basically a year ago, and now we're in a short-term correction to the upside, a lot like the dollar index. The Swiss is a major currency, but not as strong in weight as the pound or the euro. However, the Swiss is a flight to quality currency. If the flight to quality currency is going down versus the dollar, that means there's a lot of dollar strength. It also means flight to quality in the dollar, which also helps to support the dollar index. Now you can see this up move today in the Swiss. This is a radical up move coming off of this short-term low here. Yesterday it established a higher move low, especially with this follow through today. No one can deny that, which means that the market has made a higher move low, a higher move high, made a higher move low, and now it's looking to challenge this 90.48 level. The thing about this bearish engulfing line sell signal here is it took out, it made its target to the downside. So, and interestingly enough, we can look at this little thing here. Let's go to our NinjaTrader platform and let's see, US dollar Swiss. All right, so if you take the low from yesterday and we look for a risk reward trade and a projection, we have a target of 90.34. Okay, so this is what we have from yesterday's reversal of fortune and getting our bullish momentum back for the US dollar Swiss. So on our NinjaTrader here, we applied this indicator, and let me show you how this indicator works, because it's actually a great little way to figure out risk reward. Now, I use different ways of projecting my price points off of these kinds of signals. If you read the book High Probable Japanese Candlestick Patterns, you will learn exactly how I do them. All right, so when you take that high point to the low, which is your risk, so we have our entry point and we have our risk level. So it puts it back up to, yeah, like around this 90.27 level right here. Okay, so that gives us a nice little area to fall right below this high. So if our target for that level is right there, and we fall short, we hit the trade. That's a good deal. If it takes out this high, well, then that would confirm a higher move high after a higher move low. Remember, the trend is your friend, and that's what you want to pay attention to, because that is where the market is going. Okay, so we have the US dollar Swiss. We established that right now we have an upside target of somewhere between 90.27 and 90.48. Definitely a breach of 90.48 would have us in a very bullish mode. And I would say that if this happens, you are seeing the dollar index rally. You're probably seeing the euro fall apart. Now, the British pound, remember, has the oil trade. So while the Swiss and the euro may continue their trend, meaning the dollar will be a bull and those currencies will be a bear, the British pound may not do the same. Okay, so just be very mindful of what's going on with that. So now let's go and look at the US dollar JPY. All right, the US dollar JPY is coming back today. Now, the irony is you got to be like, probably some of you are out there asking, well, Teddy, if the dollar is so strong, why is it coming back off the JPY? Well, the dollar has been very strong versus the JPY for the past few days, especially after yesterday making a higher move high after a higher move low, indicative of continuing a solid uptrend. So we're probably seeing a little profit taking. It did make a higher move high today versus the yen and the dollar. So you're probably seeing a little profit taking. And while you're seeing a rolling into these other currencies, a selling off of those and buying of dollars, you're probably seeing a rolling out of this and taking some profit. Now, because of the interest rate, 30-year interest rates where they're at, where we took a look at before, you want to be mindful of the fact that the yen has a lot of issues restricting it. So any pullback right now is going to be seen as a pullback to buy. Even if the dollar index reverses, we are a short-term bull against the US dollar GP, or for the US dollar JPY. The main reason is oil. It's at the levels it's at. If it sustains here or goes higher, that's negative for the yen. We also have the issue with the other commodity-driven countries as the CRB index, which is the Commodity Research Bureau index of commodities, as the grains go up, as gold goes up, as oil goes up. These are things that you have to be mindful of. Now, here's something that you also want to take a look at, is the fact that for the US dollar yen, if you want to have an indication of what's going on with the US dollar yen, take a look at where gold is. So just how we have the US dollar over the yen, this is gold over US dollar. Now, for those of you that are not gold traders or look at different markets as a correlation, a lot of times I get the question asked, what is your favorite indicator? Well, I always say my favorite indicator is the markets. The markets are the best indicators out there. That's your real true price action. That is what the markets are doing. It is never in a lag. It is in real time. So, as you will notice, the gold market made a lower move low today. Yesterday it didn't do it, but it did today, and it followed through nicely to the downside. Now it's slightly off of its lows, and here, look, it's pressing multi-week and also multi-month lows, because in December it made a low here on November 30th, the last trading day in November, it made a low. So, with that being said, we're looking for more support testing. So why am I talking about gold? Well, if you look at this chart here, and you just go from 2021, see how this chart looks like there? And now we go to the US dollar Japanese yen, and we go to 2021. Oh my gosh, look at that. It's an inverse relationship chart. It's the opposite. They almost are identical. In fact, their pivot points, their highs and lows, come around simultaneously, where you'll see a high in the US dollar yen and a low in the XAU gold, and vice versa. So, and right now that is coming into play. So the question is will the yen rally again tomorrow, or is it going to continue to pull back? Well, I would watch the gold market. If you see the gold market get a nice rally back today during the rest of the session, or if tomorrow it reverses gears and really starts to build momentum to the upside, then you'll probably see a little more selling off of the US dollar Japanese yen. Overall, we are bullish the Japanese yen. We are looking for the US dollar Japanese yen to probably make a move that'll pressure up towards 108.40. as long as the market's above 105 even. And definitely anything below 104.40, that would take us off of the bullish campaign for the US dollar JPY. Remember, the trend overall has been lower for months on the weekly and monthly, but now the weekly and daily are well, the daily is definitely a short-term bull. The hourly is definitely a short-term bull, and now the weekly is neutralized. Another thing that we had here, which I don't know if many of you are familiar with classical bar charting, but this here is a shoulder, and right over here we have a head, and I think some of you know where I'm getting at right now. And then we have here, we have a shoulder. So we have for the US dollar or Japanese yen, besides the fact that we have a head and shoulders pattern here that started off this move and set the bottom, the head was the bottom, we also had at the same point here a high probable Japanese candlestick pattern. So you see this low right here. Let me get this high out of the way. Okay, so here was the low. This low right here is called a piercing line. That is a buy signal. Okay, so let me put a little arrow here, and then let me put this right here. Okay, so piercing line, buy signal. Okay, a piercing line is another high probable Japanese candlestick pattern. Okay, so this set off the head, which started this rally here. Then we came back, we made this low, higher move low, which is the shoulder, the second shoulder of the head and shoulders, and then it helped propel us up to here. Now, if you look at the dynamics of this, where we are buffering right now, this is a good point from the head and shoulders perspective to have a short-term correction. Are we looking for a major correction? No, but let's just give us a little valuation here. So we know that if the gold market starts to rally, we're looking for a correction in the US dollar yen, right? So ironically, the 50% level on the fib is right above this area here. So this 104.40 is a critical spot. Could it go lower? Absolutely, it can go lower and then go higher. Anything can happen. However, this shows how much of a key pivot level this is. So all bets are off to the upside for any short-term bullish action if we have a failure from the 104 area. So can you see how we form these levels here? If you guys have any questions, this is real simple stuff. We're not doing anything major here. So, and then let's see, let's also give ourselves, you got this 0.618 level here. So also down to 103.97. We're at the bottom of this arrow. That could be support too, but right now we're more worried about the short run. So watch the gold market. If you see a big rally in gold, and if you see a sell-off in oil. See, here's the thing is, because of these commodity influences, if you start to see a rally in gold, we know that right now they're trading in an inverse or a direct relationship where gold goes up, the yen goes up. Gold goes down, the yen goes down. Dollar is the only common factor for the two. So they're moving in tandem. So as long as that relationship's going on, remember that if oil sells off and if you have a rally in the 30-year treasury bonds in the interest rate market, that would be bullish the yen. So that would help to support a correction to test lower levels. Okay, so that's what we're looking at with the yen. Staying in the same trading zone, let's go to the Australian dollar, US dollar. This gave us a bearish sell signal yesterday. We are targeting the 0.7658 level. 0.7566 is probably the extreme for any sell-off. Main reason being is that this market, besides being in a monstrous bull versus the dollar on the monthly and the weekly, even the daily, it's neutral at best, and it's commodity driven as well. So besides gold, oil, and a bunch of other raw commodities, and the inflation in those commodities as well, that is helping to lift the strength in the Australian dollar as a whole. So be mindful of these things right now. Even though we have this bearish engulfing line, we're looking at the sell signal. We're only looking for a short-term correction. Okay. So very minimal, nothing really extreme. Like I said, also remember that for the Australian dollar, this 75 62, 66 area, this would be the extreme. Now, if it falls below here, that would be a big deal. The only way I see the market, the Australian dollar, US dollar getting under 75.62 would be if we have a situation where you have the oil market falling back to make lows versus highs, meaning we're at $60 right now, 60 plus. If we were to fall back to lower 50s or even into the 40s per barrel of oil, and especially if the yield curve comes back into line a little bit with the 30-year getting a rally up above, say, the $168 handle, or especially the 170 handle, which is $4 to $6 higher than where it has been in the past 24 hours. That would be something that would be necessary to validate any type of extended rally for the Australian dollar, US dollar. So at best, we're neutral. I wouldn't say that this market, like I said, is going to become very bearish. You need some other variables to happen first. I think that we're at the very beginning onset of a major inflationary move. With that, if that is true, and you do continue to see oil go up another $30, $40, that can't be good for most other markets. The cost of doing business will continue to rise. Inflation will continue, and that also will be bearish to dollar, which then also becomes bullish for the Australian dollar. So short-term sell signal, be mindful, use the high of yesterday as your risk. In fact, what we'll do is, this was our risk level before, now we're going to move it to right here, which is the high of yesterday. So anything above there, we are definitely looking at as a major bullish breakout to the upside, and we will be expecting it also to continue higher on it in a big way. Anything below the high right now, an aggressive short, like I said, we're looking for a nice little slide to get down towards this 76 half area, down to 76 even, with 75.62 being the major extreme. Now we're going to take a look at the New Zealand dollar, US dollar, which this one is being a little bit of a tough one. It's lower on the day. It's helping to give a boost to the dollar index, but this thing is a choppy sideways mess. It is getting some lift from commodities, not quite as much as Australian dollar. There's some other issues here. This market's had a big run. What you have to really key off of now is the fact that we made a higher move low after a higher move high, but we failed to make a higher move high. So only if we can breach the 73.18 area are we bullish. Anything below here, we are looking for a test of support. Now, if you look at this trend line here, it's kind of keeping the trend intact. It's just flattening out. This is by attrition. This isn't a failure of support here. This is just time going by, because you can see it's a range trade. There's not much going on. You really got to wait for a signal. Only, like I said, you can be an aggressive short below 73.18, looking for a test of the 70.93 area. Now, a failure from here, that would be a fresh sell signal. But unless we get a drop in oil and a change in a drop in interest rate prices on the 30-year, I think it's going to be hard-pressed to really see this thing sell off in a big way. All right, so we will get back to another one with a trade here. US dollar Canada. Let's go to the North American trading zone. We have something interesting going on here. Yesterday we had a bullish engulfing line buy signal. Okay, so not only was it a buy signal, it was also a higher move low after a lower move high. The US dollar Canadian dollar has been in a free fall, and especially with the oil trade existing, it's hard to get the US dollar to rally above Canada, especially because now the US is going to be a net importer, not an exporter anymore. Canada is definitely still exporting oil. With that, it's going to be hard to get any major upside move with the dollar versus the Canada, but a correction is not out of line. We do have a higher move low with a bullish engulfing line buy signal. So in the short run, we're going to look at this as a nice little potential chance to catch a rally. If you go to our Ninja Trader chart here, we got a lot of mess going on here. Let's take this off. I can delete this. This is our Fibonacci thing here. Okay. All right. So We had our bullish engulfing line buy signal yesterday, and as a price projection point, we have $1.2846 for you here. $1.2846 would make a good area to run into resistance. If you look at here, you had a lot of spiking. It was support kind of here, and then it was resistance in this area here. So let's see, $1.2846. Let's put a line right here, $1.2847. Good enough. Okay, so as you can see, where this became resistance here, before it had been support. So this will be a good area to as a gauge of strength and also of resistance. So if the market is to rally up just short of this area here, what did I say the number was here for the US dollar Canada? We have 128.46, right? Okay, so we put this back. So 128.46. Should we hit this target and stop, that would make a lower move high after a higher move low, which would still keep this market in neutral. If we get above that level and we take it out, well, then we'll be pressing newer move highs. That would be considered a nice bullish breakout on the longer term. If we take a trend line here, whoops, wrong one. We'll take the trend line from here, and we're going to come down into here. So in this regards here, we bounced off this downward sloping resistance. You can see that we've been kind of bottoming over the past like month and a half, 2 months. So are we ready for an upside turn? Well, we're getting close, especially if we take out this downward sloping resistance area here. That's our first indication of maintaining their neutral posture, confirming that the higher move low is at least putting the brakes on the major bearish action in the US dollar Canada. And then it sets us up for a challenge of this resistance area here at $1.2847. Anything above there, we will be looking for a big move higher. That we'll have to project later, but right now let's first get to this challenge part here and see we don't want to get ahead of ourselves. So we have $1.2847 is our upside target off of this bullish engulfing line. Now let's look at the US dollar Mexican peso. I don't know about you, but I could use a vacation, but I know I'm not going down to Mexico anytime soon. But I have a lot of friends with their kids in college, and they're trying to, whether spring break is canceled or not, I think a lot of them are still going to go. You can't stop the college kids, which is a nice little thing here for Mexico. Should they get a little surge of tourism, that's for sure. They could use it. Well, 2 days ago, we set a higher move low in the US dollar Mexican peso after a higher move high. So we established this low back here in January, which was the last lower move low. Then we established this higher move high here as we headed from the end of January into February. We had a little sell-off here that ended a couple days ago on Monday. We set this low here, which is a higher move low, and now we are spiking high with a higher move high today. Only a little higher on the day now. We've lost most of the gains, but it looks like no matter what that we have a bullish short-term view for the US dollar Mexican peso, and we are looking to see more and more upside action come through. As far as price levels, I would first look for a challenge of this 2060 area. Anything above here, then we're looking to actually get back up towards 21.5. So we're looking for a nice little move, a good, almost a whole peso and a half from where it's trading, actually more than a peso and a half from where it's trading right now. All right, so let's get back into some of our fundamentals as far as getting trades off for you. So let's hammer this down. So we have Forex and we have futures, we have binary options, we have futures options. What can you do with these trades? All right, so first of all, Euro US dollar. If you are trading the futures or binary options, you would look to use bearish strategies like credit spreads in the futures options, or even in ETFs, where you would be selling the strike price calls somewhere around this high, and then buying back the next ones above it. Usually about 20 cents or 50 cents to $1, depending on the gap in the pricings of the different options. As far as binary options, you would definitely be staying below $21.71 over the next 2 sessions as you go into expiration on Friday for binary options. And as far as for FX traders, obviously you would be short this right now using $21.71. This is your risk level, but you would want to use it a few pips above that, okay? If you're going to be short on this one right here. Now remember, we had some indifference on as far as euro strength and euro weakness, but remember we broke it down by ways of trying to figure out strength and weakness with the pound. So let's do that with the euro. So if we look at the euro GBP, which we already know is going lower from our British pound example, euro weakness is here. So the euro is a bear versus the pound. Now let's look at the euro. Oops, wrong line. Let's look at the euro versus the JPY. Now the reason we're going over these now and we did not before is because now it'll make sense to you. So euro JPY, obviously right here, the euro, this here is what? If you've read the book High Probable Japanese Candlestick Patterns, we have a bearish engulfing line forming right here. If we were to settle right now today, which we only have a few more hours left in the trading day, this would be a sell signal for the euro JPY. Why is that important for us when it comes to the euro US dollar? Because, or for the euro US dollar, because the US dollar Japanese yen is strong. If the dollar is strong versus the yen, and the yen is strong versus the euro, well then the dollar is going to be strong versus the euro. Okay, so let me say that once again to be clear for you. If the euro, or excuse me, if the yen is strong versus the euro and the dollar is stronger than the yen, then the US dollar will be stronger than the euro. Makes sense? It's just a relationship like that. So we have the sell signal here. If this happens to close in this around this area today, I would expect follow through over the next couple days, meaning euro weakness, Japanese yen strength. Now let's look at the what else? Now let's go back to the euro US dollar. Okay, so as the US dollar gains strength versus the pound and versus the yen, then that means that it also will gain strength versus the euro, since the euro is losing ground to the pound and to the yen. And especially with the yen having that reversal signal right now, that's setting us up now to be very bearish. So now we've figured out that for the euro US dollar here, you can start to look at bearish plays. So either they're bearish futures options plays like credit spreads, or even just buying puts. We have option expiration coming up in the futures in March, so you still have a little time for that. So those would be options or different trading opportunities for you. And especially with the Forex market, once again, we would have our risk level above $1.2171, and we're definitely looking for a test of this $1.1951. Now remember, overall, this market has been a big bull on a monthly and weekly basis, but right now we have all the indications for the euro US dollar why we should be a bear for the euro US dollar. Okay, so the Tuesday reversal was a lower move high after a lower move low, which equals a bearish market on the normal trend technical analysis. Our downside target is around $1.1951. The only thing that you have to be leery of is that should we take out that high at $1.2171, then we're looking at $1.2243 as our upside target, which would have us trading back up around this area up in here. Okay, so we could still swing higher and then come lower. Anything can happen, but right now, with the way the markets are hinging and setting up, we are looking for that trade. And so now we know that we are bearish to euro US dollar. We have a outlook and a plan. We know our risk, we know where we can get in, and we know our targets. The same thing is for the British pound US dollar. Should we close lower today? Well, remember, this one is a totally different one as far as because of the commodity driven action, but short term, the British pound, remember we looked at those crosses, is a bear. And why? The British pound JPY is reversing today, meaning the Japanese yen is stronger than the pound, and we know that the dollar is stronger than the yen. We also have the Canadian dollar. The British pound versus the Canada is a bull, but it's reversing today, also with a sell signal. As the Canada is also weaker versus the dollar, this gives credence for the dollar to be stronger versus the pound. Australian dollar, remember we had that sell signal? So the Australian dollar is a bull versus the pound, or excuse me, the pound was a bull versus the Australian dollar, and now it's starting to turn with the sell signal. Then you complement that with the British pound, or the Australian dollar, US dollar, where that's falling apart. So that gives strength to the US dollar. So you have strength in all these other currencies versus the pound, and you have strength in the dollar versus all of them. So we're looking for that to continue lower. The US dollar Swiss, okay, so for your futures and futures options players out there, it's a bull targeting that 90.48. So for any binary options, you're just got to be looking to stay above this area here from the low from yesterday or even the low from today. I would say be a buyer against those levels. If you are a bear, well, especially if it gets above 90.48, you got to be out. It's just you're going to be making higher move highs. Remember, the trend is your friend. It's been making higher move highs and higher move lows. We are looking for still yet a challenge of resistance. So buying the Forex cash market, buying the March futures contract, March of 2021 for outright positions. Then you want to use, and we're going to raise our risk up to the low from yesterday, okay? So the low from yesterday, this is a bullish engulfing line right here, by the way, also. So that is a buy signal right there. So this is a higher move low after a higher move high. We have an accelerated buying rally that's gone on today, confirming strength in the market. And markets tend to go out like they go in. So if you put a line right between these two, let's just put it right here. Okay, so if you have this little line right here, let's make it a little bit more distinguishable. Okay, that's the wrong one. There we go. Okay, all right. If you see this little line here, this little, oops, don't need to move this sell signal here. All right, we have this dissecting line right here. The market came down like this into this low, so now we're anticipating a nice surge back up. Markets typically have a symmetry. You know, as even here you can see it came down like this and accelerated back up here. It was trending lower, so of course it failed. This case, the market's trending higher, so we're anticipating actually a breach of 90.48, key resistance, making higher move highs, confirming once again a stronger bullish trend. So those are our trades for the European currencies. Now let's go to the US dollar yen once again. All right, well this one, remember we are coming to a point where we're looking at for maybe a short-term correction. Overall, we are a bull, the US dollar Japanese yen, remember because of the commodity aspects and the interest rate aspects as well. These are all things that come into play rather. So, and let's see, do we have any questions on the chat? Okay, we got some interesting comments, but no questions. All right, that's all right, guys. You don't need to have any questions. All right, so we have this level here. Let's go and look at our Ninja Trader chart for our US dollar. Where was it? US dollar JPY. Oops, we lost that. There we go. And here is the chart. All right, okay. So US dollar yen, we took out that high previously yesterday, setting a higher move high. Obviously today we're trading a little bit lower. Our upside target off of this low, which we use from our Ninja Trader risk reward trade projector, that took that out obviously because we made higher move highs. So we've already accelerated through, and as far as upside targets, well, we have longer term targets, but we're looking for a short term swing back and a break to buy. So meaning right now, especially if we can see a little pullback in oil, and we do have a rally in the interest rates. So that could be one of the reasons why we're seeing a little slight pullback. Remember, this is also possibly profit taking. I would expect to see a mimicking of what happened here, where we made this high, came back, broke for a couple days, and then turned this baby right around. US dollar strength definitely versus the yen is in play. So remember that when we look at the different currencies, you know, when we did those other crosses, we did show that there is yen strength versus other currencies in the short run, but then also in the longer term, not so much. So the yen has a lot of issues as far as gaining strength in any capacity. One of the reasons why is, besides the commodity-driven aspect, the interest rate variable on their end is locked. They're not doing anything. So their rates are going to stay pretty much at the negative rates and be very low for a while. They're not changing anything. Australian dollar, US dollar, remember we had the sell signal. We have this market trade targeting that 76.58 level, with 75.66 being 62 being the extreme. We'll see how that unfolds. Remember, right now that we're looking for just a short-term correction with this market. The New Zealand dollar, US dollar, remember, we don't have anything going on with this one whatsoever. We're not looking for any trades here, so there's no action there whatsoever. And then we have the US dollar Canada, which we are looking at as a short-term bull. So for your futures and options traders and your binary options traders, you want to key off of the low from yesterday. So let's put this into perspective here. So the low from yesterday is definitely going to be your level to key off of. So you want to be aggressively a bull, looking for a continuation of upside momentum and a breach of this downward sloping resistance. A breach here would take us off the bearish trend, confirming neutralness. I mean, we have been basically trying to bottom for months here, still making lower move lows and lower move highs. But remember, like we said earlier, today or yesterday's bullish engulfing line buy signal, this is a higher move low after a lower move high, signaling neutral, short-term possible bullishness. So with that being said, you take the combination of a higher move low, the bullish engulfing line buy signal, and now we're about to possibly breach downward sloping resistance that's holding the trend intact. That gives us a real good reason to say the US dollar Canada is neutral to higher in the short run. So for futures trades and options for options trades, you might want to look to sell credit spreads below, put spreads below the $1.2611 area. And then also you could look to buy calls or even out of the money calls. Binary options, you can look for expiration for the US dollar Canada to expire above $1.2611, some strike price either just below it or just above it, as your trade looking into the into Friday, because you have 2 days left of until expiration for those. So those are some trades you could find for the US dollar Canada. Now the US dollar Mexican peso, remember this is also in an upswing. I'd be cautious with this one. I think I'd be more mindful of the fact that if you're going to Mexico, wait to buy your pesos for at least another week or so, because you'll probably be able to save upwards of a peso, which I know probably people think, well, what's a peso? But, when you're spending hundreds or thousands of dollars, a peso does start to add up, especially when you're looking at a conversion right now at, what is it, just above 20 pesos to the dollar. And we could see 21 and a half pesos. That's a nice little substantial boost that could give, save a couple % on your trip. So right now we are bullish to US dollar Mexican peso. Remember, the dollar index, as we started, had this bullish engulfing line buy signal that is helping to give a lift to the currency markets. We are looking to continue this trade higher. And then also remember to be mindful of the 30-year Treasury notes. Right now they are trading, we're off the CME website here, they are up 20 ticks. They call them ticks in futures, not pips. I'm thinking they are in the Forex market. So we're having a nice little profit-taking rally. Remember also to watch the gold market when it comes to the relationship with the US dollar yen. Just as the yen is coming off of its high, or the US dollar yen is coming off of its highs and is slightly lower on the day, you can see how the gold market took a nice dive, making lower move lows, but it's significantly off. It's almost 50% off of its lows on this daily range for the day. So, and then also be mindful of crude oil. Absolutely, this is a commodity-driven effect that's impacting the Australian dollar, the Japanese yen, the Canadian dollar, the US dollar, depending on the relationship, and definitely the British pound as well. Be very mindful of these markets, and as they especially press new highs, we are looking for a lot of volatility to come back into the market, or to stay in the market rather, and remain for quite some time. So the euro US dollar is hard pressed now. We're looking at things kind of slowing down. So I think we've covered everything. We showed you how to use gold as an indicator for where the Japanese yen, US dollar yen trade is going. We also showed you how to look at various currency crosses that you normally wouldn't look at to figure out your strength and weakness. So remember how with the Euro US dollar, we'll give you one quick refresher before we end this webinar. Why are we a bear for the Euro US dollar? Well, we looked at the euro versus the pound, and it's in a bear trend. We looked at the euro versus the yen, and it was in a bullish market, but it reversed recently, and it's starting to sell off, meaning it is bearish. So we looked at the pound versus the US dollar. The US dollar is a short-term bull because of the reversal today. And we look at the US dollar Japanese yen, where we know that the US dollar is a yen. Sorry, excuse me, yen. The US dollar is a bull versus the yen, excuse me. So that means that when we look at the Euro US dollar, because there is strength in the pound and there is strength in the yen versus the euro, and since the US dollar has strength versus those two currencies, then that would reflects why the Euro US dollar is trending lower on the day, and we're looking for a continuation and follow through of this trend as we go into tomorrow and the rest of the week. So for the directional trades, you know, you have your Forex direction. We gave you your risk levels with the pivot points of the lows and the highs that we're coming off of. We gave you target points to use. So definitely be mindful of those. Now, as far as the tools and how we've broken down this analysis, you can easily do this all the time on your own. Remember, if you go to forex-trading-unlocked.com, we have our nav bar here. You can pull up under market analysis and education. Go to the Forex Trading Unlocked workstation page like we have here, and then you can change the symbols as you want and do whatever work you want to do on them. Also, if you go to the nav bar, you can see when you go to markets up here, we have Forex futures, binary options, commodities, stocks, Bitcoin, and like right now we have the commodity markets pulled up. So when you hit the commodity markets, then you get a page like this, and you can scroll down and it will give you the grains, the meats, the energies, the metals. You just click on the link, it will take you to that dedicated page, just like the ones we have here. Like for crude oil, we have this page up here, which also, like, see here, we can see we're streaming live right now. And then we also have crude oil, Brent futures daily, a couple other charts on here and stuff, and information flowing in that can help you out with your analysis. Forex-trading-unlocked.com. Also, we have all kinds of information when it comes to other things for you. So from our navigation bar, you can go to products, courses, and servicing. You can see how we have mentoring, trading courses, etc. The book High Probable Japanese Candlestick Patterns, which we suggest that you read. You can either follow our methodology for how to trade those patterns, or you can integrate them into your own trading systems. We definitely encourage people to do that. And there's all kinds of trading rules that are valuable and good for all levels of traders, even if you're an experienced trader, just as a reminder. And if you want to download the NinjaTrader platform, you can either go to the bottom of our homepage, or you can go to the tools section here and go to NinjaTrader trading platform. You can get information about it first, and then you can download it there. Or from our homepage, oops, that's not our homepage, we're on the workstation page. So, or if we are on our homepage, forex-trading-unlocked.com, as you scroll down to the bottom, you can get recommended trading platform, NinjaTrader. You click on this little link right here. It will pull you up this page here, get started. You can download NinjaTrader for free. It costs nothing. You have end-of-day data for free. You can get Forex, stocks, options, futures, all kinds of stuff end of day. It's a great tool to learn and get used to the trading platform. Now, if you have a trading account, you can integrate it with it, and you can trade from that platform. So remember, you can go to our website, forex-trading-unlocked.com, and you can interact with charts live in real time. Only our futures charts are delayed. Everything else is in real time. And then we also have for you here something also to take a look at. So if you want to read and get a glimpse of the book High Probable Japanese Candlestick Patterns, you go on the link here, you pull up this tab, and then you can take a little view of what's going on with that. So since we don't have any questions, I want to thank all of you very much for checking us out for today's webinar. Also remember to like and subscribe to our channel, Forex Trading Unlocked, on YouTube and Twitch. And definitely check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And we will see you again soon. I want to thank all of you for participating and leaving your comments. And we will see you soon. Take care. Thanks a lot.